Hi and welcome to the Market Alert for Tuesday, the 6th of April. Hope you had a relaxing Easter. The markets certainly continued with its activity, even though there weren't too many participants over the last few days, and we'll see that in just a moment. Meanwhile, Monday's action, the futures, that's the stock index futures, ramped high in the aftermath of blockbuster jobs and Tesla soars. And an interesting thing, Friday, the market was closed Good Friday, and you can see there was 916,000 jobs created, forecast of 652 in the previous 468. So this was positive for the market, even though, of course, most of the world was closed. Played catch up on Monday, which is why the futures were ramped higher. However, by the end of the day, the dollar was dumped, crude crushed, bonds, Bitcoin and big tech were bid. What a difference a weekend makes. Certainly does, as you'll see in a moment. And also this making the news why Joe Biden's $2 trillion infrastructure plan may fail. That also making the news as well. And Yellen, interesting sub-line here as well. Yellen urges US allies to adopt a global minimum corporate tax rate. We are working with G20 nations to agree a global minimum corporate tax rate that can stop the race to the bottom. And that's the interesting thing here. They all know that's where we're heading, with currencies devalued, printing of debt, can't raise rates, yields moving up to 2%. It's dangerous game now for the globalists and central bankers. The biggest concern is stagflation, factory orders tumble, services survey signal soaring inflation. That's a tongue twister. And again, the key here, soaring inflation, which is why you're starting to see some support in the metals and the dollar starting to move lower as well. Meanwhile, on the implied volatility front, we can see that we had a new low during Monday's session. Actually, it's Friday's session. No, it'll be Thursday. Market was shut on Friday, wasn't it? And this is not updated when the market's closed, unlike the electronic session. So this is a new low for the implied volatility post-COVID, and down in those lows is a precursor to the market making a correction, which again we'll look at in just a moment. Up slightly overnight because of or during yesterday's session, as the market started to show some weakness. And I'll just leave this one with you as well, just slightly out of order actually. This should have been before the implied volatility. 88 years ago today, Roosevelt banned gold. Will a Bitcoin ban be next? As it says here, as FDR's gold crackdown showed, tyrants know the importance of controlling money in time of crisis. We're in a crisis, it's just going to get worse. Thankfully, so far, Bitcoin has demonstrated to be resilient against the most forceful of state actions. However, what they did in 2017, when it got to $20,000, they created the futures contract at the CME, slammed prices all the way back down. And there is rumour of a potential ETF, so there'll be a new kid on the block that may be able to assist with this action. The central banks will not, and I'm telling you now, just as the Reddit traders tried to corner silver, no chance. And the same with cryptos as well. I think they're there to actually get us used to the idea of using cryptos. So when they switch, when the dollar dies in its current fiat state and it moves on to a crypto dollar, do a search. They're already working on it. The same with the crypto pound. Then all of your spending and financial transactions will be tracked, along with everything else that they're trying to track at the moment. But that's a different story. The yields, let's have a look at the last 5 days just to see where the prices have traded. We've had a bit of a dip down there on Friday, which you'd expect, lack of participants. But still in that 170-ish range, and Thursday they're still at that 1.75 as well. News, none today. It's a no news Tuesday. The market's got to make its own direction. On Wednesday, which is tomorrow, we've got the FOMC meeting minutes, and on Thursday Powell is going to speak, and then that's it. Nothing until a week today, after we've got these few news items out of the way on Wednesday and Thursday. So very quiet on the news front. So keep this in mind as well. Right, let's have a look, see where the market's trading. We'll start off with the Dow. You can see that we've moved higher over the last few days, but overnight prices are struggling and starting to move to the downside. And if you have a look at the 5-minute Dow, you can see this happened just after midnight. Prices started to sell off sharply, dropping down 140 points there, below the 5-bar moving average and also the DP at the moment. And let me just have a look at this one in a bit more detail. There we go, that's what I was after. I was after the low, which is going to be yesterday's low. The market's not there yet, it's another 140 points or so away, which is not a lot in Dow terms. In the German DAX, also daily chart to kick off with. You can see yesterday a lot of volume to the upside there, but overnight a straight reversal. So again, if this weakness is to continue, then we're going to be looking from this low that's left behind to yesterday's all-time high to see where we could get some potential support on the downside. First, we've got to break the 5-bar moving average, then we head to the 38% retracement there. Brand new all-time high, which is sitting in there at 15,367. Incredible, 367 points put on since the market got through that psychological level of 15,000. Let me just go back to that 15-minute chart. You can see the damage overnight for the DAX. This is dropped over 100 points and continuing down to the low, which we'll look at in more detail in just a moment in the 2-minute chart. But the bigger picture there, you can see this. If you look at the 4-hour chart, it's been quite amazing over the last few days. It's just vertical, with only a few bars actually closing below the 5-bar moving average, which you can see there. So the strength of this market is being quite incredible since we had this correction here on the 25th of March, but how prices have continued to move to the upside there. But that selling coming in now, you can see this overnight. It's a lot of volume for an overnight bar in a 4-hour chart. So in the 2 minutes, again, you can see that shake out there. I don't know what hit the market, no idea, but prices continued lower, found support at the S1, way below the DP and the 200 MA there. And heading towards the low where it needs to find support. And that could come in with the futures market at 7 a.m, which is about 15 minutes away there. So there we go. There's a quick roundup of where we are, what we can expect, and let's see what happens. But certainly some weakness around at the moment in the silver market. We've got prices starting to trade back above the 200 MA, which is good to see. An incredibly volatile day yesterday. It was all over the place. Let me find a bigger time frame. You can see how choppy it was, especially in the start of the session. The market coming down to the 200 MA in the 15-minute chart, and then overnight you can see prices spiking to the upside there. Needs to clear this $25 per ounce level in order to move higher, and the positions that I have on in silver, I'll just change that to a daily chart so you can see there I bought in at the bottom of this move, which I mentioned in previous market alerts there. Okay, I think that will do it for this one. Let's see what happens. Let's have a quick look at what I just think about it. This is what I do. I think I finished and then I remember something else. Gold also starting to move to the upside there as well, having double bottomed during last week, which we can see there at 1676, and trading back up from this high to the low of last week at the 78% retracement. Now I need to take this out in order to move higher. I could do with seeing an increase in volume as well in this market. Quick look at the dollar then. You can see this moving down overnight as the precious metals start to move high. You need to close below the 200 MA there and the 20 in order to move lower. And if you are a dollar trader, then this low to this high for the dollar index would be the areas of where I would start looking for the market to find some sort of support. Let me just add in a 38 and a 50 here as well. Let me just save this and again just draw this in. So we're at 38% at the moment, so we need to take out that 38 and the 50, 62 to start riding this back down to the low that we see here in February in order to send the metals markets back to the upside. So we'll keep an eye on this as well. Let's save this. Right, now I think that is the end of today's market alert. So with that, if there is anything to report, I'll let you know. No idea at this moment what caused the overnight market to drop, but I'm sure they'll do their best when they get to open in the futures market for the DAX. They'll try and move the market off the lows that we're seeing at the moment. Okay, that's it. As ever, thanks for watching. See you in the next one.